If everybody is telling me it's the best time to buy, is everybody actually scared? And I would say the answer is absolutely not. Like people are over exuberant, in my opinion. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer. And today I want to talk about why I'm going to talk a little bit about pros and cons and kind of what's going on in today's shaky economy. But I'm going to talk mostly about why real estate still wins today, even though the economy is shaky, even though things aren't quite as good as what a lot of us would like to see. Interest rates are sky high and all that kind of stuff. So I'm going to talk about though why it still wins, but I'm also going to hit on a few things that I think everybody should keep in mind. So first, I'll start with that. I'll start with the things that I think you need to keep in mind when you're looking at well, quite frankly, what you're doing financially in your own life. And so whether that's real estate, whether it's stocks, whether it's cryptocurrency, whether it's starting and running your own business, I think you need to be aware of and think about everything that's going on in the economy. Now, it doesn't mean you need to let any of that paralyze you. In fact, I think a lot of times when things are confusing, that's the best time to buy. And I think or start a business or whatever it might be. And that's, obviously some of the smartest people in the world have said that financially, the smartest people in the world, like Warren Buffett. But so what's happening today, and I'm going to start out by saying why I'm a little cautious, a little more cautious and less maybe optimistic as some people. However, I'm still fairly optimistic at things and where they're going. So the first thing I will say is that I keep on hearing over and over and over again by people that today is the best time to buy real estate. Like we have not seen this opportunity in a long time, and now is the best time to buy. And it's on every LinkedIn post I see. I bet I see it multiple times a day. And I don't spend much time on LinkedIn. I do some quick scrolls. I maybe make a couple comments on a few posts and then I'm out, right? I'm spending like max 15 minutes on it. I was at a real estate conference and everybody was saying the same thing. Today's the best time to buy. It's amazing, amazing opportunities. Listen to podcasts, every single podcast that talks about real estate and talks about businesses. Now is the best time. It's the best time. It's the best time. Well, I hesitate. And everybody always says, people keep on saying the same thing. Well, you know what they say? It's the best time. Now is the best time. And the reason why is because everybody's nervous or nobody's buying or everybody's scared. And I'm like, wait a second. If everybody is telling me it's the best time to buy, is everybody actually scared? And I would say the answer is absolutely not. Like people are over exuberant, in my opinion. So let's break it down in real estate. We had prices sky high and then interest rates shot up and prices went down. Now, when prices go down, you automatically think, well, real estate's in this big recession. And albeit like there wasn't many properties being purchased, but was it because the buyers were gone or was it because the sellers were gone? And that's what, in my opinion, it really was, is that the sellers washed away. There wasn't anybody that wanted to sell their property for a 25% loss. And the reason why there was a 25% loss, for the most part, wasn't because the fundamentals of real estate were bad. It was because the interest rates went from being able to get 2.7% to now all of a sudden being at 6% or higher. Well, that changes what happens with this deal. Like that changes how this thing's underwritten. It changes how it looks, right? We can't cash flow the same at the same price. So we have to buy it for cheaper. So that's why values went down. But I don't necessarily think, I mean, certainly buyers went away, but buyers went away at that price. Buyers were still ready to buy. And I think that's the continuing theme, is that the money is still waiting. The fear is has never, in my opinion, really transpired. Like, I don't think it's really transpired. So when we look at deals, my underwriter, I was just asking him or talking about this the other day, and he said that, look, yeah, our deals are tighter today than they were at the height of when prices peaked. When prices peaked, we were able to get deals for better return metrics. Now, again, maybe returns are a lot of times forward looking, so the prices went down, but at the same time, like cash flow wise, all that, like today, the market is extremely tight. People are pushing the envelope buying these properties. We're seeing properties go for crazy prices. We were the last. There was, I can't remember what Dak told me, but there was like 30 offers or something like that on a property. We were dead last. People are paying wild prices, and they're accepting really small returns just to get into property because they think today is the best time to buy. So, in my opinion, now is a time to really be careful, be cautious. When other people, when everyone else says now is the time to win, that's the time to lose. So, would I tell you not to buy real estate? Absolutely not. I think you should. But I think you need to be cautious. So, how are we looking at real estate today? We're looking at it as we need to lock in longer term debt. We need to get fixed rate financing, and we need cash flow. And without those things, it's just not a great deal unless there's so much equity upside that, that deal makes sense all day long, right? There's got to be either a really compelling value story where there's just so much equity upside, or better would be, look, this thing cash flows. We got fixed rate debt. We got all this kind of stuff happening, because if this is another bubble, which I do think there's a chance that it is. I know it sounds weird, but if this is another bubble that we're in, because prices went down like 20, 25%. So how can we be in a bubble? Like I said, it's over exuberance. The reality today is that interest rates are driving, but everything else, like the fundamentals, are still, like, people are still buying on um, the returns of reality today. So I don't know. Maybe I'm wrong. I could be wrong. I hope I'm wrong. I wouldn't say I'm calling it. I would say I'm cautious right now. I'm watching the market and I'm listening to people that are just so excited, and not just one or two people, like everybody I talk to. And I just have a pause there that says, wait a second. Everybody is so excited. Could we be approaching or in another bubble? So I think that's reality. And I think when you look at properties, you've just got to look at it like that. I think the if we are in a bubble, and it could be the opposite, right? It could be that these people are right, that we are at the bottom and that's it's going up, and it's going to go up quickly. And then if they're right, then, well, then I'm missing out on potential opportunity, because I could be more aggressive. I could do what some of these groups are doing. Many of these groups are doing. They're being very aggressive with their underwriting. They're assuming um, they're assuming that rents are going to go up and occupancy is going to go up. And because you look at what's happening with the building, and then they're going, hey, we're just going to lock this with bridge debt, because interest rates are going to go down, and we're going to sell in 2 to 3 years, and we're going to make a load of money. And again, they could be correct, and if they are, great. I hope they are. They're going to do really well. But if they are wrong, and we are in potentially another bubble, or entering another bubble in 3 years, when they need to sell this place because they took out short-term bridge debt, they did all the things that, basically people were doing into the last peak, into every peak, uh, it, then they're going to be holding the bag, right? And so we're not willing to take that risk. I'm not willing to take that risk right now. Um, and I could end up paying for it, but at least I don't pay for it in a super negative way. Yeah, I miss out on doing some deals. My business didn't grow quite as quickly as I'd like to, but all right. So, anyways, that's my negative side. My positive side is going to kind of counteract what I just said. And this is why we are still willing to buy, is because I look at what's happening. So I think the economy is stronger than what a lot of people think. I do still see that there's potential, right? We are in a shaky economy. I do still see there's potential for a recession. I do still think there's potential that interest rates go up. I do still think there's potential the U.S. is in trouble with how much debt they have, and we could have a debt spiral, so to speak. So I do still think that there's some issues out there, and maybe it does catch us here. But overall, I think, look, the headlines scream about tariffs, geopolitical tensions. Everybody continues to whisper about a looming recession. I just saw a post the other day. Somebody thought that we're going to see the biggest recession we've ever seen, so a depression. Stock market has been bouncing up and down. It can't make its mind up. Treasuries are up and down. But the data tells a pretty encouraging story. And again, even for real estate, I know I just was negative about real estate, but the data still does show a pretty encouraging story. And I would say overall, I'm fairly optimistic. And so, despite all the noise, here's what I look at. Okay. Inflation is down. It peaked at about 9.1% in 2022. And it steadily declined and now is hovering in the low 2% range. So the Fed rate hikes are having their intended effect. And it seems we're seeing pricing pressures finally ease, and tariffs, they even started hitting the market. We haven't seen that affect inflation, although the true data will come out here over the next couple months. So we'll see how that's really affected things. But when you think about a tariff, it's just a quick hit, right? So over the next couple months, yeah, we might see inflation tick up a bit, but then it, year over year, it starts to go down or just stay steady, right? Because it's not like it's continuing putting price pressure. He puts it quickly and then it stops. Jobs are growing. The U.S. economy continues to add jobs month after month after month, and employment is sitting there holding at 4.2, historically low. So, look, there's a ton of jobs out there, and people are still hiring. Consumer spending remains very robust. GDP growth, slower than 2021, 2022, but it's still positive, and consumers are still buying. So we're not in this crazy boom economy, but I think we're in a pretty healthy position overall. It's maybe slower than what some people want to see, and there's still some cracks out there that, again, don't stop us from having a recession, certainly, but I think we're overall pretty healthy economy, employment base, consumer demand, all that kind of stuff. So that's kind of the economy. And then when we look at the multifamily fundamentals, so I'm going to talk specifically multifamily because that's my obviously niche. When I look at what's happening, again, I already mentioned the interest rates. Interest rates are high. That is causing negative pressure on valuations. That definitely causes negative pressure on cash flow. When I got to get a mortgage for 6%, I certainly can't cash flow as much as I got a mortgage at 3%. That's obvious, right? But when I look at kind of what's going on in the multifamily world, occupancy rates are stabilizing and trending upward in most markets out there. Renters are staying put longer. I think that's huge. So we've got less turnover that's happening in these properties. The demand continues to outpace supply in most locations. And this is even despite record deliveries. Now, deliveries are going down. And so when I look at 2024 record deliveries being introduced to the market, new apartments built, 2025, first half of the year started out really strong, but we're seeing a big drop off. And I'm going to continue to see that huge drop off into 2026 and right now 2027. And we'll see what the future holds. But it's expensive to build and interest rates are high. So it's really expensive to build. And then the market's a little softer. And so it's challenging for people to buy right now. So I think that's definitely has put a kibosh on building, which really helps when we look at demand and we look at potential rent increases. It helps those things. So rents are growing again in a lot of markets. And you see the South and Southeast and some of the mountain markets, they got clobbered. Rents were going down pretty consistently and actually good amounts. But in most of those, I shouldn't say most, in a lot of those markets now, they have seen a reverse trend and they're starting to see it move from negative to positive territory, albeit very low. But they're starting to see that. And even the markets like in Austin, Texas, and Phoenix and Charlotte and what else was really bad? Those markets, although Austin's probably the worst of them. So Austin has still seen negative rent growth, but it's seeing that slow down and start to swing closer to the positive. And I would say in 2026, it'll hit positive territory. Now, there are a couple markets, and I mentioned Charlotte. There's a couple other markets that are having overbuilding that's still going to happen, but that'll trickle off. That'll still shut off to here in the next, year or so. They'll have a little bit longer runway in Austin. We'll have a little bit longer runway, but eventually those markets will swing to the positive, and then they're going to see nice rent growth. So I expect to see rent growth in that 2 to 4% range. Some markets might not hit it until 2027 or late 2026, but I think most markets will hit that 2 to 4% rent growth range within the next 12 months, and that's going to be awesome, right? That's what we want to see because expenses have been well over 2 to 4% in many cases. That's the next part is expenses are starting to flatten. Insurance premiums and labor costs have really moderated. When we see the big uptick, insurance was huge. We were seeing 60, 100%, 120% increases in insurance premiums. And that puts huge pressure on your NOI. And we're seeing those flatten and in some cases even go down. So insurance expenses or premiums are for the most part flat. Labor costs have moderated. Material expenses have moderated, utilities, all that kind of stuff moderated. We aren't seeing, I think the only kind of wild card still is property taxes as cities need more and more money or counties need more and more money. Or what's going to happen with property taxes? So I think everything is a lot more predictable than it was over the last, call it year, 2 years, probably. The last reason I like real estate is because interest rates are higher and cap rates have expanded. I think that spells opportunity. And I know it's a little, counterintuitive to say that high interest rates actually create opportunity. But I think the longer interest rates stay high, the more that you'll have sellers come out and say, I'm going to sell my property. And with more inventory, that could cause prices to shake loose a little bit and cause deals to happen. And so I'm actually optimistic that we could see, maybe prices won't go down, but as profits go up, I think that we could see some expanding cap rates slightly, or at least continue to stay kind of where they're at. So um, I think it's overplayed a bit right now, but we are buying at a discount, right? So when I look at the market, you look at we're buying at a 20 to 25%, even maybe 30% discount. Now, again, I think it's overplayed because what's discount really mean? Um, it's not like you're getting better returns. You're getting probably worse returns. But if interest rates do end up going down, or the market does end up taking off, and rents, skyrocket, those types of things, you'll have a really well positioned property, and you're buying off of peak. So I think there is some value there, um, in saying, hey, we're buying off of the peak market. As interest rates stay higher for longer, again, sellers shake out. Some sellers are going to be forced to sell. Other sellers are just going to say, hey, look, we want to sell and we don't see an end in this high interest rate. So let's just do it now. Let's just offload this property. Other people are saying, hey, there's opportunities out there. I want to sell this property, move up. We're seeing a lot of people that are moving up in quality. They're saying, we want to sell this 1980 building and we're going to buy a 2023 built building, which I think is a great plan, especially if you're older and you just want to keep it for a legacy purpose. So that's hopefully going to continue to shake deals loose, and create opportunity. All right, so that's kind of what I'm seeing. Why I still think real estate wins. And look, real estate's a long game. It doesn't require perfect timing. It just rewards smart buying, good, steady operations, and long-term ownership. It does. And if you can buy properties, one of the things that I'm really looking at when I look at a property is I look at, can this property cash flow and sustain itself now, right? I also want to create some value in the property. So what opportunities lie in that property? But then, can we sell this in 3 to 5 years? And can we hold this for 10 or 20 years if we want to? And what does that look like? And so when we look at properties, I'm going, what's my refinance strategy here? Do I have a sales strategy and a refinance strategy? I want both. And if I can have both, in my opinion, now you've got two exit strategies. You've got a sale and you've got a refinance, and we can hold this thing long term and continue to cash flow and do well. That's a hard to lose situation right there. So I really like that strategy, and that's how we're looking at a lot of deals: is, can we buy this cash flow with some upside in the end, and can we potentially refinance and hold this property long term? Because again, what happens in this market over the next couple of years, we just don't know. When quite frankly, we never know. So I think it's fun. It's smart fundamentally to do all the time. So what's our strategy? Last thing is, look, we're looking for well-located A and B class multifamily. We're looking for deals that with clear operational upside. Long-term debt is huge for us, and just conservative underwriting that really focuses on recession resilience. I saw a deal the other day. It only focuses on the market going up, and that's just not a good position to be in. This deal was only good if cap rates compress, and pretty significantly. And I just think that's a dangerous position to be in. I think that, again, short-term bridge debt is a dangerous position to be in. I just don't think that's a winning scenario. It's a gamble. Let's just say that. And I think you got to look at the fundamentals and go, okay, let's just be smart. Let's buy well-located properties with good debt, clear operations, clear business plan, and we're going to do really, really well in the long term. So real estate wins, just do it right. And it doesn't really matter as much what happens to the market if you do it right. That's all I got for today. You have a fantastic rest of the day. Make every day Saturday. Hey, thanks so much for listening. I appreciate you being a loyal listener. Say, I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.